All right, guys and gals, party's over, break time's over. Time to get back to work here this evening. It's Wednesday evening after all. It is April the 15th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help you find the best entry setups for tomorrow's trading session. And I have a jam-packed video in store for you guys and gals here tonight. The charts are already in the background. We get some oil, some S&P, and of course some gold on the video tonight. Got a bunch of ranges, and I want to make sure you know how to trade those ranges for tomorrow's trading session. And of course, speaking of tomorrow's trading session, got a bunch of news stacked up early in the session tomorrow. I want to make sure you know when to be really making sure you're at your desk tomorrow to find the best entries trading around those news events. So we'll grab the charts, we'll grab the calendar. I'm all ready. I'm glad to see you're here with me as well. Before we jump into the video tonight though, please make sure you subscribe to this YouTube channel. I don't want you to miss every video we publish on this YouTube channel. Don't forget, if you have any questions, drop those questions in the comment section below. I'll circle back after we finish up and make sure I answer all the questions. And of course, as always, if you tune in every evening to watch this video, help me shed the love, right, by hitting that thumbs up button. I always appreciate you guys tuning in every evening on this video. So thank you so much for tuning in. Hit that thumbs up button if you guys follow the video every evening. And let's not waste any more time on this. Let's get this video going tonight. I'm going to kick off the session tonight with the economic news calendar here for tomorrow. Tomorrow, of course, is a Thursday morning. And as I mentioned earlier on in the week, we're going into the end of the third week of the month of April. So we know there's going to be a bit of a kick up in volatility tomorrow and into Friday because of options expiration. Tomorrow, as we go into Friday, you've got markets, especially like the E-minis, the S&P will definitely be impacted by the options expiration the third Friday of every 1 month. Now, we also see today a lot of trading ranges on the charts, like I mentioned in the introduction. And since we're seeing a lot of range-bound markets, we do anticipate there may be some big breakouts tomorrow. So we'll talk about that tonight on the video. So going into the end of the week, increased volatility, and right now we get a bunch of these markets that are all coiled up in these small ranges, and we'd like to see if we can get some big breakouts. And we'll talk about those breakout patterns looking for here tomorrow as well. Now, look at the news here for tomorrow, Thursday morning, April the 16th. Let's take a look at what we got on the schedule. Everything, as you can see here, is piled up early in the session tomorrow. I've got 8:30 jobless claims, housing starts, and the Philly Fed survey. Now, you know, as I've been saying all week here, normally these would be very big news events right now, especially the Philly Fed and the housing starts. You know, jobless claims too. I mean, we've seen like 15 million jobless claims in the last 3 weeks of jobless claims. So all of these are really potent news events. My biggest concern though this week is we are still waiting to hear more details about the reopening of the U.S. economy, and obviously the rest of the world, right, trying to put their details together as well. We keep hearing updates from the White House here in the U.S. about coordinating different sectors of the country. We're supposedly supposed to hear something a bit more definitive by the end of this week. Will it be tomorrow? Will it be on Friday? Your guess is as good as mine. But we know right now, though, that these big news events tomorrow at 8:30, they may not have as much of an impact as they normally would. But make sure you're there, though, tomorrow, though. I would imagine in the wake of that news tomorrow, 8:45, 9 o'clock, 9:30, into 10 o'clock. If you can only be at your desk tomorrow morning, I would definitely make sure that hour and a half in the wake of this news tomorrow, that is likely where we're going to see the biggest explosive opportunities. So we're really kind of waiting to see if we're going to see more plans to reopen the country. We've also heard more this week about these OPEC production cuts. We'll be listening in more on that tomorrow in our trade room. So increased volatility expected tomorrow. Big news early in the morning. We're waiting to hear more about the plans to reopen the country. And please don't forget, every morning we get together and we trade the strategy together. No matter what happens tomorrow, make sure you come join me every morning at 8 o'clock Eastern Time, Monday through Friday, as a member of our trade room. I'll put all the membership registration information. That way you can get registered and come out and trade the strategy with me tomorrow morning in our trade room. All the links for membership, I'll put them right in the description of this YouTube video. In the meantime, We know the plan for tomorrow. Let's grab our charts now and let's get this party started. We got some oil, we got some S&P, and of course we got some gold on the video tonight. I'm going to jump in first to oil. They're all very similar charts here tonight, so it should be a relatively easy lesson. And for the most part, if we zoom out a little bit here on the oil right now, let's start off with a little bit more of it zoomed out here now. What do we know about oil? We know that we've got a lot of momentum here for the bears right now, right? We know we are bearish here on the oil. We also know we're sitting right around that big support level we talked about in last night's newsletter, that 19 and a quarter area down there, 1928, right? 19 and a quarter area. So we know we are bearish. A bear market tells me I want to sell at resistance levels. We also know we're sitting at a pretty important level of support, and we talk about this quite a bit in last night's newsletter. What else do we know here right now? If I zoom in a little bit closer here on this, you'll notice that we've got a range. Now, what does a range tell me? Anytime I see a range-bound market, I know I want to sell high, I want to buy low, and I want to avoid the middle of that trading range. Now, since there is a bearish trend, a bearish bias as we call this of course will be much better for me to be selling up above the top of that range, right? So range bound markets tell me buy low, sell high, avoid the middle. I have a bear market right now, so it's definitely in my best interest to be a seller above the top of that range. So we know where we're looking to sell. There's one more important component here, and that is what I'm sure a lot of people might be calling a flag right now. This big, strong move down the last couple days, and we're kind of seeing this almost like a flat channel. It's not a very steep channel, right? The market hasn't reversed directions. We're not seeing a real steep, sharp channel. It's just kind of a lazy bull channel. And because we haven't seen a lot of momentum here for the bulls, we have to assume the bears still have control. But this channel, or as you might call it, a flag, right? I'm sure a lot of some of the old school traders out there would say, nah, this is a flag, right? It's a bear flag. And so whether you want to call it a bear market with a channel or whether you want to call it a bear flag, whenever I see a flag, I always know the two most important spots to look for entries are going to be up around the highs and ahead of those lows. And that's going to play a big factor in our plan for tomorrow. So put this all together here for me. We know we have a bear market. I want to be a seller up above the high of the range, right? So we don't get a range. I want to sell high. I want to sell at resistance. And you can easily see we can mark up these highs. We can get these lows. And that support trend line ultimately is a big spook. It's a big challenge here now for those sellers, right? I want to be a seller up here, but I really don't want to sell into this rising support. The most important thing that I always try to do whenever I see a flag is I try to get short off the highs, which usually requires a bit of a nested failure pattern, or I look for traps off the lows to make sure I'm not selling into those lows. So those are the two main components for my trading strategy here tomorrow. I want to sell high, I want to stay out of that middle, and maybe we can find some setups here to buy off of these lows. So let's break this thing down here. Let me clean up the chart a little bit here for us. We know we get the measured move up there overhead. That'll be a level of resistance. Okay, let's talk about selling at the high here. Remember, the magnet, that trading range underneath us, that range is the magnet. What goes up will likely come back down. What goes down, well, it's a pretty bear market. It's not a guarantee to come back up, but usually it will come back up into that trading range. I want to be a seller up off of these highs. How do I accomplish that? Well, my favorite setup off the highs of basically a bear flag is to look for what I call a nested failure pattern. And that is, as the market tries to go higher, I know I have that measured move level of resistance overhead. It's a bear market after all. I want to sell at resistance. The problem is when we make this run going higher, this momentum will be quite strong. And my favorite setup, my favorite entry pattern when I'm trying to sell and I have a little bit more bullish momentum than I feel comfortable with is I like to look for what I call a nested failure. I wait for the first pullback to the moving average. I look for buyers to try once. Usually we'll get just a little bit below the moving average and buyers try twice. Once I see those buyers now committing twice on that pullback, see, I've learned over the years that usually the markets will try things twice. If they try and they fail twice, they usually end up going in the opposite direction. So if the buyers can't get this thing moving higher here, most of the time now, we can sell right into those stop losses for a pretty easy short back down into that trading range. It's called a nested failure pattern. Now remember, if those buyers, if they were to hold that pullback and make a run higher now, that would be a breakout. And that would successfully be what we call a 1, 2, 3 breakout pattern. I would mark up that high. I like to find those big lows down at the bottom there. That finds my channel, and now I can buy the low of that trading channel. We call that a 1, 2, 3 breakout. In this case, it'd be a 1, 2, 3 reversal as well, breaking free of the range, reversing the trend, giving the buyers control, and then buying the pullback off the low of that channel. Those are two setups I'm watching for as we make the move going higher. Now, what if we drop lower here? Remember, I want to use this range as the magnet. But how do we drop lower? I got this trend line here. And honestly, it could be this one. It could be this one. It's a little bit difficult to tell which one they're going to use right now as that key level of support. Now, we talk about this quite a bit on this newsletter, right? So don't cheat if you've been here for many times. But if you're brand new, my favorite way to sell without selling into support is to look for what we call traps. And so trap patterns, what you really want in this situation is you want a series of lower lows followed by a trap high. That's going to be the ticket to sell as we go back down into that trading range. So imagine now as we go lower here, I don't want to try selling the pullback, okay, because you're selling right into that area of support. Instead, I'll look for a pattern I call two-try trap. It'll have a little bit of lower low, shallow pullback, lower low, and then a nice trap high there to get you in to avoid selling into that rising support. Now, we should also mention too that if we go back into the range and start to kind of roll around here a bit, this whole channel will disappear, right? So let's say, for example, we end up back inside that range here, for example. Let's say we kind of tumble back in and we end up going sideways inside that range now. Now none of this is really a big concern anymore. Now we've broken through all the support. Now we're back inside that range. We're bearish. And what's my favorite pattern to trade in a range? Sell high, buy low with failure patterns. I'll wait for the bears to run out of bullets. I'll wait for the market now to poke its head higher. That moving average now will come over. And this is where the magic happens. We look for those buyers to buy off the moving average, and we can sell right back into those stop losses. You can see the example of it back here, right? We go back above the range, we get up into the sell zone, the buyers try to buy the pullback, and it sinks back down into that trading range. As long as we can get back into the range here and really confirm this is no longer a flag or a channel, now I can start getting more serious here for selling aggressively into buyers' stop losses right off the high. That's called a failure pattern. So boy, at this point now, we've talked about reversals, we've talked about traps, we've talked about nested failures and two-try failures. I'll tell you, there's a lot to learn as a new day trader. We're going to do it together every morning in our trade room. But if you're not there with me tomorrow morning and every morning, Monday through Friday, the next best thing is to grab our free trading course. I'll put a link in the upper right-hand corner for you. Grab the free course. That way you can learn all my favorite entry setups, the 3-step strategy we use in our trade room, and you'll see hundreds of examples of how we apply that strategy to our favorite futures markets. So again, the best way to do this is to come out and join me tomorrow morning. And again, I'll put all the membership information for you to get registered in the description of this video. But if you can't be there with me every morning, if membership isn't quite right for you right now, the next best thing is to grab that free trading course. That way you and I can get the most out of this together every evening on this video. Now, One more thing here. What if we really blow through these lows here, right? Remember, we've got a big area of support here at 1928. This is that big bottom down here, right? Big bottom all the way back there from late March. As we go lower, right? As we go lower, can I buy down here? You know, we talked about a 1, 2, 3 reversal to be a buyer, right? Can I buy off the low? You could buy off the low if you wanted to. It would be a lot less reliable. What you want to look for, though, is going to be that crown reversal pattern, that 1 try, that 2 try, that trap low, right, and go from there. Now, look very closely at how this pattern looks. Okay, because you'll notice it's not right. It's not a simple pattern. You got to get the higher highs in price and the lower low, that trap low. That's going to give you the ability to get the bears to commit. Remember, that's the key. The bears have control of this market. So you have to respect their intentions. Their intentions are to run this thing down to that pendulum swing, down at 1881, right? They want to get that pendulum swing. The amount of move above is the amount of the move below the range. They want to get that pendulum swing right now. So we got to make sure those bears commit once and twice, and then find that trap low and grab that trap as we go back up into those highs. What I'd also like to look for tomorrow is if we see this thing really run strong. I know where they're trying to go. They're trying to get that 1881. If we see this thing really take a nosedive, if you will, right? If it really jumps and runs lower, what I can do here now is I can look for a 2-try trap. Trap patterns are the best patterns to avoid selling into support. And again, I got this area of support down here. But if I can see a real strong move, you know what I mean? If we can see a real strong move going lower here, get that lower low, that shallow pullback, that trap high, that'll be a pretty reliable setup here because we're so bearish. We're just so bearish right now on this oil. I would also keep your eyes open for a strong move down, a hold off the moving average, and a strong move through. If I can get a momentum push through that pendulum swing, we will probably make our move down to that next level down here, 18.25. We identified here on the chart, 18.25. So if we do get a strong move down here, right, that pullback to the moving average, if it really jumps off that moving average down here, what do we call that? We call it a 1, 2, 3 breakout. Now remember, a strong move down is not enough to confirm a breakout. We've seen examples of that before where strong moves do not mean continuations. But if we can see a strong move down, if we can hold that pullback, and just like to the buy side, right? If we can hold that push going higher, if I can do it going lower here, I have no worries about finding that hidden channel and selling off the high of that hidden channel. Just remember, though, you got to see a lot of strength coming off of that moving average, right? They got to give a strong move down. That's great. But you've got to see those bears come in and really hit it off the EMA. That's going to give you the confidence now that you've got that breakout. And again, my target's at that point down at 18.25. All right, guys. So now we get a pretty good plan here. We know how to buy it. We know how to sell it. We know that we got to stay away from, right? Remember, these trend lines here, got to be aware of that. Look for those traps as we're going. If we sink back down to the range, now it's all gravy again. Get up, failure, and back down. Or, again, will they get that 1, 2, 3 reversal? I'll tell you, there's a lot of open space up there. $22 a barrel is a really juicy target for us. I would not be surprised whatsoever if we see a nice pop off these big lows, but only time will tell. And again, don't forget, I teach all the details of this inside the free course, and we'll do it together tomorrow morning as a member of our trade room. Let's keep this party going here now. Oil is looking good here for tomorrow. How about some S&P over on the E-mini? Now, like I said, a lot of similarities here across the charts here tonight. What do we know about the E-mini right now? We know we're bearish. What does a bear market tell me? Sell at resistance. What else do we know here? We've got our range down here, flattening moving averages, chop, 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 right? That trading range. What does the range tell me to do? It tells me to buy low, sell high, and avoid the middle. We're very bearish, though, right now, so being a buyer might not be the most reliable trade in the world. I definitely want to focus on selling up above the high of that range, right? What else do we know here right now? Usually, once we get a range, one of my favorite, and if you watch every evening, you know this already, one of my favorite tools to use in a range market is to find these kind of expanding triangles, if you will, right? You're drawing off the highs, you're marking the lows, and that really does a good job at giving us now some great areas of entries and exits. Look to sell off the high, look to buy off the low, or, like I should say, take some profit off at the low. So we can look at this and say, okay, I want to stay away from the middle. I want to make sure I'm selling high, taking profit, or looking for some reversals off the low. We'll talk about both those here in just a moment here this evening. But we know we're looking at a range. We want to sell high. We want to buy low. What else do we know? Rising support trend line. In fact, you could probably make a case for this being its own flag pattern like we had on the oil, right? I don't think it looks as good as the one on oil, right? But I think at the very least, though, a rising support trend line. So remind me again, when I see a rising support trend line, what's my concern? My concern is I'm selling right into a level of resistance, or a level of support in this case, right? I don't want to sell blindly into it. I want to use those trap patterns, right? So traps off the lows, right? Failures off the highs. We're looking pretty good. We're looking pretty good here. So similar plan here on the S&P, right? If I can get the price going higher here right now, momentum won't be as bullish, right? The oil market, it was looking a lot more bullish than this market looks. This market looks very bearish. They really spent a lot of time pinned to those lows. They got their move up. The buyers failed, and we're busy sinking right back down again. What I'd like to do is really look at this area up here. This area right up top there around that high and the high of that triangle. That's really where I'd like to get up. Get those buyers now to come in and try to take the pullback and sell into those stop losses. Now, there's a chance here we may see a little bit more of a jump. And if it really jumps off of that low, remember, it's not a reversal yet. It has to hold that pullback, right? It's going to hold that pullback and go. Then it's a reversal. Then I can mark up my high, I can mark up that low, and I can buy off of that major low. Remember, it ain't a reversal until they can hold it. We see lots of times where we see strong breakouts. They look very convincing, but they fall flat on their face down back into that trading range. So if we do see this thing, if it does snap higher here, right? Snap higher, not hold higher, but if we really do see a strong push up here, just like the oil, look for that nested failure, that one try, that two try. That's when your stops are, and we can sell right into those stop losses. We call those nested failure patterns because there's basically two failures nested inside the other. And then obviously, right, we've already got some great spots here for a trap. So as we go lower here, I've got some swings I can use. But I wanted to think about this, though. Really, the only swing I can really be comfortable with right now is this one up top here. And I'd like to get up above those highs for a trap low, right? Trap high, right? Going back above a prior swing. This is that same kind of two-try trap pattern that I mentioned earlier on the oil, right? Traps will definitely work as well. So two-try trap to avoid selling into support. Failure pattern up around the high of that triangle, the expanding triangle. Now, as I mentioned on oil, if the market can kind of tumble back inside this range now that trend line really isn't that big of a deal anymore, right? So now if we can make our way back into the range, right now, start going sideways again, get some moving average flattening out. Now we know we have a range again. And because now there's no concern about rising support now we can go back above the range again. We can look for that buyer failure, and we can sell back down again, right? Remember, once we break free of that trend line we're dealing with now, in all reality, you could use it still, right? You could leave it on there. It won't hurt, okay? Get that. Eventually, the bears will run out of bullets. We'll get that pop higher. Use that trend line now as resistance, but really what you're doing is you're waiting for those buyers now to try to buy that pullback, right? You're waiting for those buyers to try to buy that pullback. We know exactly where stops are, and we're selling right into those stop losses. Again, it's a buyer failure pattern because in a range, what do? We buy low and we sell high. right? That's the most important thing. The problem, though, is you got to get underneath that trend line first before we can start being really confident and getting more aggressive on those setups. Now, like I mentioned earlier on the oil, as we go lower, this is a great example of that triangle bottom. Okay, aggressive buyers here, you can look for those crown reversals. And again, watch how these are drawn, but I'm telling you right now, though, that's going to be a pretty aggressive trade. The only time that might work a bit better is if we could kind of extend this thing out a little bit here. You know, if this kind of gets a little bit older and we start getting this, the bottom line is I want to be buying down. If I'm going to buy this of a market, I want to be buying down inside that buy zone. So I need to get that trend line down in that, you know what I mean? I got to get that trend line down in that buy zone here to really give me enough space to make it worth my while. That's the hard part here. So if we just bounce off of it, there's not going to be a lot of open space there. It's not going to be a very desirable trade. I'm going to have to get through that low, probably get that moving average coming over, and then start looking for maybe we hold that trend line and trap low, right? So we kind of run lower, we pull back, we see them hold that first one, go up and trap. Now that's something you can get down with. That is something you can justify there. It's the same pattern, right? Same pattern here, except very different, right? Very different. Taking it inside the range. Again, it's that crown reversal pattern, that nested failure with a trap low. That's the key here. I want to get down inside that buy zone. And again, I'm not saying it's the most reliable trade in the world, right? It will be a less reliable setup because you're going against the overall momentum. I always try to go like a quarter size position on these reversals, right? Going against a trend, go one contract, right? Go two contract, get that trap low. One try for the bears, two try for the bears, trap, and then go. Really try to get down into that sell zone, but then start to see them holding that trend line. That should tick all the boxes here for us. And I'll be honest, though, that pendulum swing will be a very difficult target to miss here. If we can get a real strong move down, I'm definitely not thinking about being a buyer on it. I'll look for those two try traps. Again, very important here that we get that strong move down first. If I can get that real strong move. Now remember, guys, there's a big difference here between going into the range and then seeing a strong move. That's not nearly as reliable. That two-try trap pattern is not nearly as reliable than if it was to go through the range. At that point, you know what they're hunting for. They're hunting for the pendulum swing. The size of the move above, the size of the move below, we know they're trying to go here. If I can get a real strong push through that range, right, we know exactly where they're trying to go now. Now we look for that shallow pullback, that lower low. They'll usually miss that moving average, that lower low. That's when you know you get a trap, two-try trap pattern. And I always like to incorporate additional levels of resistance on this. So what I'll do is I'll draw the trend line down, trend line up, and I'm always trying to find those additional levels of resistance to add on to those entry patterns. So be aware of that. Now, another thing going to be important here is we look at the bigger picture here, and we can see that if we can break through these lows, we have a nice juicy area of support down there at 27.10. You have to think these bears are drooling over that right now because it almost looks like one big range up here, right? One big range. So there's a big bullseye down there around that 27.10 and change. If we can get a strong move through, follow that up now by holding that pullback, give me a strong jump off the EMA, we're on. We can now definitely find that new channel, and we can sell off the top of that channel. 1, 2, 3 breakout into hidden channel pullback. Keep in mind, the same thing is true to the upside. Strong move up, pull back to the moving average, jump off the moving average. Now remember, you can't trust buying that first pullback. All you can really trust is now, remember, we see strong moves up all the time. Right? You can't trust that first pullback. Those are very, very common to fail and go right back into the range. If I can get up, if I can see some proof now these buyers actually want this and they can hold that pullback, okay, now we're good. Now mark up the high, now mark up the low, Find that hidden channel. We're buying off that low. Big target up top there now, 28.46 and change up there, right, for that retest of that high. Or let's say something comes out this afternoon. We see a big strong push up. If we really see this thing rip higher, remember, watch for that two-try trap, that shallow pullback, that higher high, shallow pullback, higher high. That's when you know it's time for a two-try trap pattern. And again, I'm always trying to find some additional levels of support there to be a buyer off of it. Now remember, again, I'm going over all the different scenarios here, right? What if it pops higher? What if it sits sideways? What if it runs lower? Tomorrow morning, we'll do this all together in the trade room. I'll put all the links for you in the description of this YouTube video, or make sure you grab that free course I keep talking about, linked up in the upper right-hand corner. All right, guys? So again, we're trying to be a seller off the high, go up, failure, back down, right? Or to try trap off of the high of that triangle. If we sink back into the range, it's all gravy now again. Mark up the range, pop your head higher, get that buyer failure, and sell back down. Or, right, maybe the buyers hold at that time. It's a reversal. Mark up the high, buy that low. As you can see, we'll apply the same methodology, the same strategy over and over again. You know, my job is simply get us ready for all the if-then statements here tomorrow. What I'd love to get, though, is that 1, 2, 3 breakdown here. Mark that low, mark that high, and sell off of that high. I think you're going to see a lot of bears really attack this thing if we can see a lot of strong momentum here off these highs right now. Time will tell, though, here on the S&P. I'm looking forward to another great day tomorrow in the trade room on the E-mini. Let's wrap it up tonight, though, on the gold, the yellow metal. Something different here on this one for us, right? Yeah, it's a range again. Gold, of course, is looking pretty similar to the rest of these markets. What do we know about gold right now? Boy, gold's been back and forth instead of ranges and ranges and ranges. It's been a range-bound market on gold pretty much the entire month of April. What do we know about gold right now? We know we've got a bear market. We know we have a trading range. Now, this is an interesting trading range because you'll notice how they poked their head below the range. So that really helps me now to figure out, okay, where do I want to look to be a seller, right? Remember, the size of the move below is the size of the move above. That'll be a great spot now, 1764, 1765 up there around those highs. Range-bound markets, what do they tell us? Buy low, sell high, buy low, sell high. And keep in mind, guys, the size of that trading range is what determines the size of the sell zones and the size of the buy zones. We cover a lot of those details in the free trading course I've mentioned a couple times already. And of course, we have all the details in our members video classes. So we know we've got the buy and sell zones up overhead. It's a triangle, right? Or it's a range. So anytime I have a range, I'm always thinking triangles. Right? I'm looking for opportunities now to sell off the high, to buy off of the low, as long as we can get enough space off of that low. Remember, it's a bear market right now, and so we want to make sure we're trying to go with that momentum. And if we do go against momentum, just make sure we're using very small position sizes, right? So if you typically trade 2 contracts, you want to go 1 contract. If you're a 1 contract trader, though, you probably shouldn't be going against momentum. If you're a 1 contract trader, your job is not to make money. Your job is to get to 2 contracts. That's what your job is. As a 1 contract trader, your job is to increase your winning percentages, get the wind at your back, make it fun to trade. You know, that's one of the most important things we talk about in our trade room is being patient, being disciplined, especially if you're on a minimum account size, trading 1 contract, or you're on the micro contracts, really making sure you focus on, can I get my winning percentages up around 80%? Because then that confidence that you get from it, it makes trading fun, and it kind of has this self-fulfilling prophecy to it, does it? So, you know, 1 contract traders, you probably want to stay away from those counter trend or counter momentum trades, right? Buying off of this low. We'll wait for those until you get those accounts built up, right? To be able to cut those position sizes down here good enough. Now, I'm going to get rid of the measured move here, but that measured move is a very important area because you'll notice this area down here, This is not like the S&P. The S&P has a lot of open space below it, right? The S&P has a lot of open space underneath it. The gold doesn't have that. Gold has a major bottom right at that low. Now, if they can break through that low, there's a bunch of wide open space below that. But this is it's a pretty rock solid area here. You get a range back here, so we got to be careful, right? The S&P had a bunch more space to run here. If they can push through that low, then obviously 1670 is a very viable option later on this week. But we definitely don't have enough information on that as we go. So I'm going to get rid of those measured moves here, clean up the chart just a little bit here for us, and then that week now we can get to work here. Now, a lot of this, again, will be kind of repeating myself as I've done before here. Stay out of the middle, sell high, buy low. Whenever I have a triangle that looks this good, you really want to try to use those triangle levels. And one of the things we talk about here is kind of how momentum looks. So, for example, I want to be a seller. If I zoom in a little bit closer on this, if I want to be a seller on this, if I run up and go sideways here for a bit, then we jump up here, that momentum now is not going to be a very big deal, right? We're going to spend a lot of time in the range in this example, so momentum's not going to be a big problem. I can sell into a failure setup. I can sell into buyer stop losses, right? You're waiting for that break higher. You're waiting for all the bulls out there to confuse this now with a breakout. We know it's not a breakout yet. A breakout has to hold and go. So once those buyers sort of buy off of it, now we know where stops are and we can sell right into those stop losses. But be aware, though, there's a big difference between that pattern and a pattern that goes straight up, right? If it really rips higher to get that pendulum swing, that momentum now is going to tell us what pattern. What pattern works best whenever I want to sell, but I'm worried about momentum? It'll be that nested failure. The first one is usually off the moving average. Second one, usually below it, right? And the next one is the one you want to sell right into those stop losses as we go back down. Remember, what we're trying to do here is we're trying to catch those breakout traders with their hands in cookie jar, right? That's what we're trying to do. We're trying to wait for those breakout traders to kind of dig their own grave almost, right? Wait until they got their hands all the way in the cookie jar and then pull the rug out from underneath them and go back down into that trading range. And remember, right, if we get a strong move up, if they can hold that pullback and jump off the EMA, perfect. Now it's a breakout. Mark out that high, mark up that low. I know it's not fun to watch it go without you, but the reality is you can't trust that first breakout. Right? And I don't want to hear about some special indicator. I've been doing this for a long, long time. It's very, very difficult to predict which breakouts will work, right? I don't want to hear divergence, right, in the comments section or some magic, volume profile tool. No. I've been doing this a long time. Very difficult to anticipate which breakouts will be successful. What I can do, though, is I can anticipate how much momentum is there, and I know if I see a strong move up, I can go 1, 2, and then sell it. That's what I can anticipate, right? I can anticipate how many tries the buyers will give before they fail. I simply can't tell, though, ahead of time if they're going to hold that thing successfully. Once they hold it, though, and run higher, now it's on. Now we know where we want to be a buyer. We're buying off the low of that channel. And again, every once in a while, we get some news, and this thing rips, right? And this is one of those times where you've got to be a little bit, a little bit of experience will go a long way. And of course, I'll make sure to point those out in the trade room tomorrow morning. But if we see this thing just rip higher here, if it really races higher, shallow pullback, higher high, if we get enough momentum, there is a point where at some point everybody goes, okay, give me a pullback. Give me a pullback. Shoot, no pullback yet. Give me a pullback. And it pulls back and it barely touches the moving average and buyers are going, that's it? Well, now they got to get aggressive. Now the buyers will start parking their orders right below that low, and that's where the magic happens after those two tried trap patterns, right? My target, of course, for the buy side, up around that high at 1788, 1790, right? Give or take here a few ticks. So that's how we want to go up and sell back down. What if we go back into the range here? Not a lot changes, right? Not a lot changes. We're still overall bearish. I still want to go up. I still want to get those buyers to try and fail, and I'm selling into stops. Or if we go sideways here for a bit, we make the run lower, Okay, now momentum is very much balanced now. We're still bearish, but if we sit inside the range right now, momentum is very much stable at that point. We wait for those bears now to come over. They try once, they try twice. There's your crown reversal for that buy off the low. Again, be very careful with these reversals, okay? Very small position sizes. And again, if you're a new trader or you're on a minimum account balance right now, these are patterns you got to simply practice in simulation. You don't want to be putting real money on these yet because they're not going to give you a high enough winning percentage, right? 45, 50% winning percentage. It's going to be very difficult for a new trader to mentally continue to trade confidently when you're taking, a loss for every one trade you take. One win, one loss. It's like I said earlier, it's all about when you're a new trader, getting those winning percentages up, get your confidence going, get your account growing. Then you can afford to trim down the position size and start taking these more risky trades because they do work, right? They do work, but they're not going to work as often. And so you've got to have the ability to leave that runner to really capitalize on those big moves. Now, remember, at this stage now, we can't just do the same big short, right, down on those lows. We can't get too aggressive down here and sell into these lows. You can try to use a two-try trap down here, but it's not going to be a very comfortable spot, right? This will be a pretty uncomfortable spot here. If I can see a strong move down, right, shallow pullback off the EMA, it's just, I'm telling you, you're playing with fire on that. That'll be a very low probability trade because of where you are. Right? Remember, we're not just here trading patterns. We're trading the pattern in the right market's context. Context stinks down there to be a seller. Now, what I will do though is, if I can see a strong move down, and if they can hold that pullback off the EMA, and then I see some strength going through, bingo, now we're on. Now I can mark that low, I can mark up that hidden channel high, and then I can look for that sell off of that high. A much more reliable trade. Remember, it's all about reliability. I would much rather a new trader, if I was a new trader again, I would strap my hands down and make sure you're not over trading. I can't trust those ones. I'd rather have you take only 1 or 2 trades a week, but have them both be high percentage and winning trades. I mean, who cares, right? At the end of the week, who cares? Are you in the green or are you in the red? When I was a rookie, I was over trading. I'd make some, I'd lose some, I'd make some, I'd lose some, and I always ended up in the red at the end of the week. Who cares how many trades you take, right? Sitting at the dinner table with your husband, your wife, right? Your girlfriend, boyfriend, right? Your best friend. We're all locked down together right now, and having a winning week is worth it, right? Being disciplined to wait for the right trade setups, and again, if we can get that 1, 2, 3 breakout, we can then look for that short off the high of that channel and a wide open space waiting down below here. All right, I think we're looking pretty good now. So buyers can buy off the low, but be very careful. Buyers can certainly buy a reversal once we see proof. In the meantime, selling a high, selling with buyer failures up of the high of this trading range. Man, what a great session today we had in our trade room. I'm looking forward to another great session with each and every one of you guys tomorrow morning at the opening bell. Don't forget to get registered for tomorrow morning's trading session. I'll put all the membership information in the description of this YouTube video. Don't be afraid to call me here in the office tonight. I'd be more than happy to walk you through everything so you know how to get registered. And as always, guys, if membership isn't quite right for you, don't forget to at the very least, grab the free trading course. It's part of our free trial. You'll learn my 3-step strategy, my 4 favorite entry setups, and see hundreds of examples of how we apply those setups to our favorite futures markets. It is certainly worth your time and energy here this evening. So guys and gals, great to be here back with you once again tonight. Have a great rest of your evening. I'll see you tomorrow morning with all the members in the trade room. If not, come back and see me again tomorrow night on the next edition of this nightly newsletter. My name is Joseph, and as always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.